Are you ready to take your first steps into the exciting world of real estate investing? Whether saving for your first property or exploring the idea, this guide is perfect for beginners. By the end of this video, you'll have a clear roadmap to start your real estate investing journey. Let's jump in. So, why real estate? Real estate is one of the best ways to build wealth over time. Here's why. Passive income. With rental properties, you can generate monthly cash flow. Appreciation. Property values increase over the years, adding to your net worth. Tax advantages. Real estate comes with many tax benefits, from depreciation to deductible expenses. Plus, investing in real estate allows you to diversify your portfolio and protect yourself from market volatility. Doesn't that sound promising? Now, let's talk about the different ways you can invest in real estate. Real properties. These are long-term investments where you earn rental income. House flipping, buy a property, renovate it, and sell for a profit. REITs. Real estate investment trusts are a hands-off option where you invest in real estate through the stock market. Short-term rentals. Platforms like Airbnb allow you to earn money by renting properties for short stays. All right, it's time to dive into the action plan. Here are the steps to start investing in real estate. Set your goals. Decide if you want cash flow, long-term appreciation, or both. Educate yourself. Learn the basics. Terms like ROI, return on investment, cap rate, and cash flow are essential. Get your finances in order. Check your credit score, save for a down payment, and explore financing options. Research markets. Look for areas with high rental demand or potential for property appreciation. Start small. Consider buying a single-family home or a duplex as your first property. Build a team. Work with real estate agents, lenders, and property managers to streamline the process. Remember, preparation is everything when it comes to successful investing. Let's save you from making some costly mistakes. Here are 3 common pitfalls to avoid. Skipping research. Always analyze the market and property thoroughly before buying. Underestimating costs. Don't forget to account for maintenance, vacancies, and unexpected repairs. Emotional decisions. Stick to your investment strategy and avoid overspending. Mistakes are part of learning, but the fewer, the better. Here's a quick example. Imagine you buy a property for $200,000. Down payment, $40,000. Monthly rent, $1,500. Monthly expenses, mortgage, taxes, insurance, $1,200. Cash flow, $300 a month. Over time, you'll pay off the mortgage, enjoy property appreciation, and benefit from rental income. Multiply this strategy over several properties, and you're on the path to financial freedom. And there you have it, a complete guide to getting started with real estate investing.